Hello everybody, Zeph here with Zeph's Trading. Hope you guys are doing well today. Today I'm going to be going over my main trading strategy and a very simple scalping strategy. If this is for an explanation of all my chart reviews, what I look for, how I look for it, where I got it from, etc., etc. So stay tuned for that, and we'll jump right into it. So some honorable mentions real quick. People who've helped me throughout the years. I want to give credit where credit's due. Linda Bradford Rashke has a YouTube channel and a Twitter. Go ahead and check out all of her content, amazing content. We have Mac from priceaction He also has a YouTube channel. He is the one who I am following for this trading strategy and has made it known. He's been trading for, it seems like, well over 15 years. And his YouTube channel goes back for 12 years before all the crazy financial gurus. So there's that. Quant Trade Edge. Great YouTube channel, probably the best YouTube channel right now that I can possibly find for quality trading information. He has a YouTube channel and a Discord. Please go ahead and check that out. You have Mark Douglas, who rest in peace, and Tom Hugard for the psychological stuff. Tom Hugard also does a kind of technical analysis, but does a lot of psychology as a Best Losers Wins book. Great book for trading. So yeah, those are just some honorable mentions. Getting past that, let's jump right into it. Before I dive into this trading system and its techniques, I want to highlight a few critical aspects of making money day trading. Firstly, it's essential to have basic understanding of futures, contracts, support, and resistance. So if you don't know that, there's plenty of resources like books and websites that explain it in detail, so I recommend going and do that before continuing. Additionally, these techniques are versatile and can be applied to any market chart or time frame, whether you're trading stocks, bonds, futures, forex, or any other market. Personally, I prefer and suggest trading the ES or MES, the mini futures, due to the factors like liquidity, available leverage, low day trading margins, low costs, commissions, etc. Secondly, this trading is solely based on price action. You don't need to rely on any crazy algorithm or indicators, and you only need one monitor. While it may differ from other trading lessons you've encountered, you'll find that all you need to trade profitably is a single chart and the ability to draw trend lines, support and resistance lines, and understand where the price action is going and might go. Anything beyond that is unnecessary and could just be distracting. If there's one thing I want to take away from this introduction is that trading isn't a get-rich-quick scheme. Instead, it's about making a living slowly and methodically. The broker I use is NinjaTrader 8. I have tried everything under the sun, and I recommend that broker. I am not affiliated, but if they want to, just hit me up in the emails. But NinjaTrader 8 is the platform I use for executing and my charts. And for my indicators, I use a 21 bar EMA. I just basic trend line, support and resistance. Sometimes use the ATR with a 14 period ATR indicator for just the average true range. And I use a 2000 tick chart. You can also use a 5-minute chart if you'd like. You need to make sure that you're treating it like a job or a business, aiming for a salary rather than a quick riches. Sorry, tongue twister. The other main ability that you need to be able to have is identifying the market. You need to identify, is it range bound, is it trending, and you need to trade accordingly. So you have to adjust to that. Sometimes you have to sit there for hours and do nothing. You got to make sure that you're also not over trading, focusing on only 2 to 5 high quality setups a day. Prefer the second entries, and that's what we'll be aiming for today and getting into. I aim for a 1R, which is in my case 8 tick profit target or 2 points on the ES. Ignore the news. You don't need Yahoo News up. Just make sure you know where the news events are. I also have an indicator for that, but you can use a website. And just focus on the price action. The market often moves in twos. Failed moves also can lead to rapid reversals. Maybe market moves in twos if it just moved straight up, it doesn't. Human psychology doesn't do that. So that's why I won't get into that right now, but it moves in twos. And then you need to just determine the type of day. Quickly trade with the trend. On trend days, you got to fade the highs, buy the lows, range days, etc., etc. Never counter trend trade in a trending market. Trade with the trend is your friend. I'm sure you've heard of that. You just need to understand when that is and when that isn't. That's what people always don't tell you. Okay, so a trader's checklist before a trade. Number 1, identify the bias. And this might seem a little boring. I know I haven't gotten into an example yet. I promise we're getting there. You got to understand. It's like painting. You have to do all the prep work before you take the actual trade. The trade or painting, it only lasts for 5 minutes. the prep work. This is the prep work. You have to understand this. So that's why I'm talking about it. Just bear with me. So the trade checklist is you have to identify the bias, locate key entry points, identify high probability setups, analyze the signal bar, analyze the congestion, then make the decision on if you want to execute or not execute the trade. Feel free to pause the video and you can copy this, write this down, whatever you got to do. But that is the checklist that you need to make sure you're doing before you take a trade. Also, you have risk management. So you need to protect your capital, don't size up. That's what Linda Bradford-Raschke always says. As she's seen, most people why they stop this business is they just size up, try to get huge gains, and they blow up, and they can't trade anymore if you have no more capital to trade with. So if you don't understand what's going on, just sit idle. You need to stop trading once you net 2 winning trades or 2 losing trades on the day. Now, these are my particular risk management parameters. Feel free to copy them. I don't mind, but each person's different. Stop taking new trades at 2 p.m. Eastern Central Time. Study your chart and do your homework at each trading day. Managing your capital is the most important thing. Like I said, I go for 1R or more. My profit target initially when I enter the actual trade is about 1R. So 8 tick profit target, 8 tick stop loss, 1R. But I sometimes have a runner. And once you kind of develop your system, you can do this just with one contract. But the runner helps with the math at the end. And makes up for those losing trades that you might have. So what is the scalping strategy? Okay, people call it two-legged pullback. Al Brooks is kind of one, I'm pretty sure at this point, who's for sure been known to make this thing fully public. There's plenty of people out there talking about this and plenty of YouTube videos on it. But I call them second entry shorts, second entry longs, two-legged pullbacks, high ones, high twos. It's all the same thing. The terminology isn't the same. Just look at the price action. Again, Al Brooks is basically notable for being kind of the price action godfather. He has a YouTube channel, books, etc. It's kind of hard to digest, but yeah. In his works, he highlighted a two-legged pullback to the moving average as among the most favorable trade setups, particularly in the presence of a strong trend. To understand this concept, it's important to grasp the basics of counting legs. A new leg up starts when a bar exceeds the high of a previous bar, while a new leg down begins when a bar falls below the low of the previous bar. So in this specific order, this is what we look for. New swing high, new swing low. Pullback, candle breaking below previous candle. First attempt at price breaking higher. Pullback, again, candles breaking below previous candles. Second attempt at price breaking higher. We enter the position. Let's get into some examples. Thank you, Trading Setup Reviews. Not affiliated, just found this on Google. Okay. You clearly have a downtrend. You have, first, 1, signs of rejection. As you can see, price is below the moving average. You have a strong thrust downward to confirm the trend. You have your swing low here. I drew this little line here, that's why it's a little crooked. And you have a first leg up, pulls back, second leg up, pulls back, enter 1 tick below on this red arrow, on this nice closing on its lower 1/3. Price rejected off the moving average here. You can also see a double top. That is a two-legged pullback. That's all it is. Let me do it again. Up bar, up bar, up bar, up bar, up bar, up bar, down bar. First leg. Up bar, up bar. That's the second time it tries to go down. Bulls tried once. Bulls tried twice. Failed. Bears are back in control. That's what you're looking to go with. Okay? Let's do a couple more. This is from Al Brooks's website. This is free. Go ahead and check it out. So he calls them low twos. Again, don't get confused about the terminology. If the first move down fails and there's a second entry, the pullback is just a low 2 bear flag. In retrospect, it also is just a bear flag or a bull flag. So here's the low 1, pullback, low 2. Enter on the low 2, 1 tick below our signal bar, stop loss 1 tick above. Again, new low 1, pullback, low 2. Now in this case, Al Brooks does, in this particular chart, just to show each in particular one, we make it a little more discretionary with price. You want it to be within a trend line. You want it to be kind of more at the MA, the signal bar. Is it congested or not? Is it, clear two-legged pullback? Is price action very nice and clear, or is there congestion, etc.? Let's look at the next one. So those are both short examples. We'll look at the bullish example now. Counting from our high here, high 1 pulls back, high 2, second entry long, first entry long pulls back, second entry long right here. Enter 1 tick above, stop loss below. Again, new high formed, Again, price is also all above the trend. We're with the trend, okay? All we're doing is looking for pullbacks. First entry long, pullback, second entry long. So if bears tries to sell off and fail, they will give up, creates a high 2 bull flag, buy above the bull bar since bears existing with a loss. That's basically what they're doing. Also, all the bears are putting their stop loss, one tick above, one tick below, and gives us momentum to the high side or downside. And I'm going to switch over to some live trades real quick. Okay, over here at some live trades for today as I'm doing this video. They happen every day. And I'll be putting this in my chart review. Great example here. So this is our high right here. This is the most string high. We have a clear uptrend with the moving average, the 21 EMA, pullbacks once, pulls back twice. Great signal bar, closing green. We want to be bullish. We're going with the trend. Second entry long. The second entry short. Swing low. First entry short, pulls back below the moving average. Plenty of room back to the bottom for our profit target. Second entry short, go short with it. Okay, so now kind of understanding how those work and the examples as well. Go ahead and practice them. It takes about, I would say, a month or so to really fully understand them and see them and kind of get good at practicing them, trade small. Once you kind of get that, you can add things to your arsenal and you can do failed second entries, breakout pullbacks, false breakouts, higher lows, lower highs, triple tests, double bottoms, etc., etc., even hidden second entries. Once you master 2 setups, that's really all you need to continually make money, but you also have to incorporate the psychological stuff, and Mark Douglas gives some great principles about it. 1, I objectively identify my edges. 2, I predefine the risk of every trade. 3, I completely accept the risk or I'm willing to let go of the trade. 4, I act on my edges without reservation or hesitation. 5, I pay myself as the market makes money available to me. 6, I continually monitor my susceptibility for making errors. 7, I understand the absolute necessity of these principles of consistent success, and therefore I never violate them. So I guarantee you one of these, when you blow up or having a bad day, you can go back to this and understand why you did what you did, and you probably checked one of these off. So conclusion, again, this isn't a get-rich-quick scheme. You need to find an edge that suits your personality. An edge took me a very long time to find, but an edge, just remember, as Mark Douglas says, is nothing more than a higher probability of one thing happening over another. That's all it is. Now, how to find an edge? You got to gather a bunch of data, make a hypothesis, go test it, etc., etc. Psychological issues will be there, and you need to overcome them. Look towards pros and professionals who are trusted and have a good track record. Mark Douglas, Tom Hugard. Above all else, understand that risk management is the only thing that matters. Capital preservation is key, or else you'll just not be able to play the game. If you blow up, size up, or risk things you can't afford to lose, you can't play the game. So thank you so much for watching this video. Hope it kind of explains at least a little bit of a summary of what you can incorporate, what I trade, how I trade, where I got it from, and who some of my inspirations are. The last thing, if you have made it to the end of the video, thank you so much. I really appreciate you watching. It means a lot to me. And I will leave you with this. This YouTube link I will not put in the description below. I will make you pause this video. I will make you type in each and every single letter that is here, and it is a link to Quant Trade Edge, his lecture at a university on the positive trader's equation, and it is probably the best piece of trading knowledge you'll ever watch. It's about an hour long, I believe, and he goes into what it takes to become a professional trader, what it means to have a positive trader's equation, and how to be consistently profitable. I think he does an excellent job on it. The lecture is wonderful, and it's by far the best thing I've come across by just sitting here at my computer day by day without going to any professional schooling or anything like that. It's just the biggest piece of golden nugget that I've ever found. So shout out to Quant Trade Edge. Thank you very much for doing that lecture. And if you care enough, you'll pause the video, type in each letter, and go watch it. Hope you guys enjoyed this video. See you guys next time.